What's going on in our real estate market? Is it getting better? Many will argue we've bottomed. I'm not entirely sold. John Levy, president of John B. Levy, here with us right now. John, done? More to go?
No, we got more to go. We're, I think as we like to say, we're out of intensive care, but we still feel like we're in recovery. Let me give you a couple of examples
Please.
of that. CMBS, which is the financial engine that really started all this, $10 or $11 billion last year. This year we're talking about $30 billion, $40 billion, so triple, really big change. But that's less than a third of what is probably normal. And in 2007, it was $240 billion. So a long way to go there. Investment sales in 2010, double what they were in 2009, but still less than 25% of the record in 2007. So out of the out of the emergency room, but we still got a long way to go.
But who's in worse shape, the commercial real estate market or the residential?
Well, it feels like the residential is, because that's a market that doesn't want to seem to bottom. And it's interesting, we had quantitative easing too, and that was supposed to keep rates down. In fact, that really hurt housing because rates are up on the 10-year Treasury probably 100 basis points from the bottom. And the residential market, if nothing else, is all about, can I afford this? But commercial actually feels like it's still very uneven, but it feels like maybe we're actually ahead of our skis in commercial. So,
is it because, in your notes, commercial real estate loans totaling $900 billion will need to be refinanced or rejiggered or something, right?
That's right.
And that sounds like a ridiculous sum of money. But is it because people for a long time now have been saying the commercial market's next to fall, commercial market's next, that maybe there's been proactive bankers and proactive apartment building owners who have went to the banks and said, let's do something or this is going down?
Yeah, I think that's right. I think the numbers that we're looking at, first of all, this is really not the big banks. I think that issue is over when we worried about the too big to fail. If you look at the number of, quote, problem banks, there are probably 900 problem banks. Most of them, you don't even know their names. They're smaller, they're mid-sized, they're in smaller locations. So there's still a lot of air coming out, a lot of decompression, a lot of lower leverage. So a lot of equity still to be raised, but people have taken the kind of hits. And I think this year we'll see a lot more restructures, frankly, than we did last year.
Your investment banking firm is headquartered in Virginia. Virginia actually has done pretty well through this whole thing, hasn't it? We
have. And now, one of the things we have that nobody else has, or we actually have two things. One, we have the D.C. suburbs. And
Federal government.
And like it or not, the government's growing. I don't care which administration's in. I don't care how much they say they're cutting back.
I know.
Government does very well. Your paycheck reflects it. We also have Tidewater, where the Navy and we have a huge military presence. So actually, Virginia has done better. And in most of our areas, except for D.C., we really didn't have that huge expansion that we might have seen in Atlanta or other southwestern cities like Phoenix.
In the commercial real estate market, though, we've seen the major cities, for the most part, hold on. Some actually are turning around and coming right back. I mean, New York, it went down, but it didn't come crashing down.
Well, it's really uneven, Tracy. For example, if you look in downtown D.C., we've actually had record prices of what I'd call first-class premier office buildings, all-time record prices. That being said, if you go out in the suburbs, it's very uneven. We just did a discounted payoff on a note on an office building where they wrote over $10 million off in the same basic area. So when you look at areas, you can't just say, well, D.C.'s doing well. In a general sense, it is. New York's doing well. Apartments very well here. But we can go to other cities like Atlanta or like Charlotte. Apartments are really still quite weak. So it's a very uneven recovery.
So what's going to take to fix this? I mean, is it forcing the government, if there's a way to step out?
No, it's jobs.
It's jobs.
Yeah. I mean, I don't care what we say about real estate. We always get back to where are the jobs? Where's the job growth? And right now we've got 9.4, 9.5% unemployment, and we're raving about the fact that maybe by the end of the year we're going to be at a whopping low 9%. I'm not sure that's a lot to rave about. Now, it is good in that we're headed in the right direction, but we're not headed there quickly. So if you want to fill up an office building, you've got to hire more people. If you want to fill up a warehouse, you need to have businesses do more in the way of production. So this is a jobs question, really.
What's interesting, I think, and we were talking about it earlier, is that the jobs that are being created are not the high-end jobs.
No.
So if you're low to medium paid, you probably still can't even afford to buy a house, right?
Yeah, that's right. And interestingly, that's pretty good for apartments because when you think about it, what happened in the housing boom? People moved out of apartments. One, they had cheap mortgages, and two, the banks would lend them all the money, and prices were going up. So if you didn't buy today, tomorrow you were in trouble.
Agreed.
Today, rates have gone up, so it's much harder to get a mortgage. Underwriting has gone up, so it's even harder. And if you don't buy one today, the same house will be cheaper tomorrow. But what that means is you stay in your apartment. So from an investment point of view, from a financing point of view, that's actually good for multifamily.
That makes sense.
Yeah.
That makes sense. So there is some upshot there, too.
There absolutely is.
The jobs thing, though, that's not, to your point, it's not coming back anytime soon.
That's going to be a long recovery.
So then that translates into the housing market's not coming back anytime soon.
That's right.
That's basically what you're saying.
That's exactly what I'm saying. And I think we've seen this, we're still starting to, still seeing a number of new lows in housing prices. So again, that doesn't excite anybody to buy when you think that next week my house could be underwater. Yes, I put up the requisite down payment, but I'm not pressured to move. I don't see the housing market. We've still got several years to run in this bubble. So the housing market led us into the decline. We were hoping they would be early out. I don't see an early out.
And what's, and unfortunately, nothing the government has done has helped. They were buying back mortgage-backed securities for a while, and everyone thought that once they stopped, interest rates would start to eke their way up. Right. We haven't seen that at all. Mortgage rates are ridiculously low, and still people are not buying.
Well, mortgage rates are low, but don't forget they're now 100 basis points higher than they were just, a month or so, 2 months ago when this, qualitative easing came in. So 100 basis points doesn't seem like much when you move the Treasury from, say, 250 to 350, and you say, so what? It's still low. It is low. But that may be the difference between your being able to afford the house you really want and saying, I think I'll wait a little bit, because, by the way, house prices are still coming down. So are rates low? They're very low. Am I worried about them skyrocketing? Not in the short run.
John, it all works together, right? And, if I don't have a job, I don't want to buy a house, I don't want to tie myself down, I'm going to rent in case I get a job somewhere else. And then you have companies saying, I could suck blood from a stone with the staff I have now. Why should I expand? Why should I get a bigger office, bigger manufacturing plant? So there's this, it's almost stagnation.
Yeah, it's very hard to grow. You'll put two people at one desk rather than rent the new space. Right. And the new space is relatively cheap. But you don't want to take that risk because you're not sure. Although it does feel like, Tracy, if we look back 3 months, certainly 6 months in commercial real estate, we are definitively better than we were. A year ago, can't even compare it. But if you said, is this the new normal? Gee, I hope not, because we've still got a long ways to run.
Talk about slow and steady. That's exactly how
it's coming off the bottom more rapidly than I think most people would have thought. But again, very uneven both for cities, for property types, even within a city. You can go to certain areas that are good and certain areas that are very, very unstable.
It's still sketchy.
It is.
John, thank you so much.
A pleasure.
We could talk about this all day. Unfortunately, we have to go. John Levy, president of John B. Levy, down in Richmond, Virginia. At least parts of the country are doing well.